Hello, welcome to Stock Shark. We will be looking at next week trading plan. This is for the week of 20th December 2021. Before we dive into charting, let's grab what's happening in last 1 month. Especially, I've been noticing lot of these growth stocks or new age tech, those companies are selling off very odd and they are not recovering at all last 1 month, be it Square, PayPal, Visa, CrowdStrike, your Roku, you name any of those new age technology stocks, they are falling very odd. This resembles very much similar to what happened back in March 2000. So let's dive into the chart. Then we will talk about impending warning sign. Let's look at this chart. So SPY really sold off last week. If you look at my prior video, I clearly mentioned about that. I've been bearish on this SPY and other growth stocks for some time. So if you look at here, it's in it was in the channel for last 1 year, but right now it's failed to break out from the upside of the or in the upper boundary of that channel. It's falling. If you look at this area here around 470, 471, it's been getting sold off. It tried to break out from 470, but it's been failing last 3 to 4 weeks. That is actually a warning sign. And you look at here the volume on the down days, it's picking up really bad. I see strong support at the last time it was sold off around it held around 450. So I've been watching whether this will be like a support where it bounced back from 450 or not. So that's a critical level because it's a prior support area. If it breaches, it's going all the way to 50-day moving average. Sorry, actually 200-day moving average. That is around 433, 434 area. So sell-off could be, could happen because most of the institutional traders are away from the desk in next 2 weeks due to year-end holidays. So that means it could exaggerate on the downside. The same way that happened on the post Thanksgiving day. So be cautious. Also, I'm looking at technicals. It's really bearish. I don't see any positive sign at all. RSI is really bad. MACD is going down. It's not even recovering. Negative divergence. RSI is in actually a neutral zone around 47, but its momentum is going down as well. So all these technicals pointing to bearish sign. So extreme caution is warranted right now because market was really up last 2 years. You might have really gained good money. If so, it's time to protect that whatever gain you got. This is the time most of the traders lost their gain and including their capital in the thinking of market would recover. So be protective on the downside, so at least you can protect your capital. So I'm looking at really bearish sign, and so caution is warranted. Let's look at key things to watch. Per last FOMC that happened on December 15th. Oh my God, Mr. J. Paul was really hawkish, and it's not about tightening the or tapering the QE. because interest rate is still zero, right? But the Fed plot indicates 3 to 4 hike next year. So that takes a lot of air out of bubble. So you got to really position yourself, because if you think any of those growth stock would bump up, so that means you aiming for short term gain, but long term they are all going down. So don't sacrifice your long-term gain with short-term profit mindset. So caution is warranted. VIX is close to 21.57. Anything above 20, I would say it's a bearish for the broader market. Small cap is not at all recovered from the previous high that happened in the last 3 weeks and off. So it's not at all gaining traction. That is again a warning sign that broader market feels pretty much bearish. So many growth stock. I don't want to name everything here, but just an example I mentioned about CrowdStrike, PayPal, Square, Roku, Visa. They're all down anywhere from 20 to 50% from their all-time high. In my experience, I have seen like this before, and most of them never recover to previous time high. So maybe some quality blue chip or growth stocks here could recover to all-time high in next few months, few years, but that would be really handful. Most of them, they don't recover. If you look at year 2000, technology bubble burst, 99% of them never recovered. One or two like Amazon type of companies recovered. So you need a lot of luck to pick up a right one. Yeah, even the business look like really sound or whatever it is, but if there is no momentum, those companies never recover to previous time all-time high. So very much bearish on these names. Most of the institution traders, I already mentioned about that in the previous screen. They will take off from their desk due to holiday season. So that means thin presence in that trading area from various institutional traders means it would exaggerate the move on either side. If a market look like as if going up, that's like a short-term squeeze could happen, but long-term it's going down. So caution is warranted. So I'm pulling at triple Q as well, because one way or not, if you look at SPY, that has 26% of their constituents or technology. So if technology go down, I don't think SPY could recover. So if you want SPY to see going up, that means triple Q should also go up. But I don't see triple Q going up anytime soon. Again, same thing. It broke like Friday. It looked like it closed positive but green, but actually it's broke the downside channel. So and it's simply sitting on that support 382 384 area, but I'm seeing it's going down. So support is 366. If it breaches 366, then it will be touching the 200-day moving average 357. So negative again. These technicals are negative. I don't see any positive here at all. Everything is going down. The caution is warranted. I'm bearish on triple Q. Actually, in this market, very difficult to find any bullish sense for any of the script, whether financial, energy, staples, technology, any sector. I don't think anything bullish except certain things like materials. And out of materials, I pick up gold because it's a safer play. Even if it goes down, it doesn't go down really big. It could held at support level, but I'm bullish on gold. The crypto thing is definitely a bubble because it's an intangible asset. Crypto is intangible. It's a lot of technology in it, but the price you pay for Bitcoin or Ethereum is so much high. I don't think people are aware of that. I don't think people are trading based on valuation. It's all Ponzi scheme where they buy something and they expect someone else come and pay more. so that they can unwind their position with profit. That is the mindset going on in the crypto world. So very careful. I'm bullish on gold. Last 5,000 years gold endured so many things. I don't think crypto could replace gold that easy. So right now I'm seeing resistance at 171, and and also I'm looking at the technicals. It's actually breaking out to positive side. So it's a right time to get into gold and edge your long-term portfolio if you have one. So that's all, folks, for this week. Trade with the caution in next 2 to 3 weeks. Take care.